Well, hi everybody. I just thought I'd do a quick little video, sort of a market conditions in Squamish right at the moment. I think there's a couple of items that are really important to look at. And I'm going to mention right away, obviously we know the Bank of Canada has raised interest rates. There is no sign of that stopping. The PCE just came out, which is the sort of the consumer price index that the Federal Reserve in the United States uses to determine inflation. It came in very slightly hotter than expected, which is indicating that the Federal Reserve is not going to reduce or pause on interest rate increases anytime soon, indicating that Canada is probably going to do the same thing. Canada and the United States, the Bank of Canada and the Federal Reserve have already said that they are going to continue to raise interest rates, and this is having an impact on home prices. Now, everybody understands that at some point they're going to have to slow things down. But we are seeing the bond market, as far as the stock and the equity market goes, the bond market itself is already pricing these interest rate hikes in. And the bond market has run away, causing stocks to sort of collapse and drop below June lows. And we're now in an essential bear market as far as the stock market is concerned. And that leads us to the housing price index, which, as I mentioned before, is about a 2 month to 3 month lagging indicator. And prices have come off dramatically. This price from here to here is the biggest change that we've seen in the last 5 years in real estate in Squamish. So you have to realize that that's the biggest fall. Anticipate strongly that in September that fall is even going to be longer. We're going to see the new numbers come out probably within a week or two. Once those numbers come out, they're going to be even lower. So be prepared. The government's intending on increasing interest rates, and that's kind of where we're going. This is the biggest rollover we have seen. No, it's not rolling over on the rolling 12-month average, but you can see it's starting to change its trajectory just a little bit, but not enough to sort of get ourselves into a bear market as far as real estate is concerned, but some definitely to keep your eye on. Now, if that breaks the trend, I've often drawn trend lines here for you guys. I don't think I'm going to figure out how to do that right now, but you can see the trend line typically goes from here. It's running through here and there. So we have broken through the trend line, which usually means it's time to start looking for downward pressure on home prices. Now, over the last 20 days, I think it's really important to look at this. New listings, there's been 50 new listings. Now, a bunch of listings have come on as people are realizing that this might be their last opportunity to sell on the basis that people are having to be qualified at the 7% stress test level, which is reducing their buying capacity. Those that locked into mortgages before the September 7th rate announcement are qualified for more than they're going to be qualified for if that rate hold runs out. So those people are going in and buying properties, which I've seen in my own business. We've seen a dramatic increase in the number of people buying homes over the last 2 weeks, but I do recognize that that's a temporary push. And certainly for those people, it's a great thing to do. There's nothing wrong with, if you're getting a good rate buying a property, and then the property market does fall a little bit more, but then it takes off again, you're still going to be in a good position moving forward. But keep in mind that new listings are coming hotter than expected. New sales also at 23. That's not bad for our market where it is, but it is substantially lower. 50% of new listings, and 42 properties came off of the market, and there were 29 price changes. That's showing that people are starting to recognize they need to drop their price, or they're taking the property off the market and they're going to wait till spring, which typically I don't think is the best idea moving forward. I think people have to recognize that prices are likely to be slightly lower in the spring. Now, in the spring and into the summer, depending on what happens with interest rates, that's when we could see the tide change or the bottom fall out. And it's anybody's guess what it's going to go from there. I don't see the Fed or the Bank of Canada doing anything with interest rates and changing position too quickly. I mean, if you look back and you think that sort of let's say 3 years ago, you go back here, the housing price index was at 800,000. It's now at 1.1. Let's use 1.2 for easier numbers. It's almost 50% higher than it was 3 years ago. So if the Bank of Canada reduces rates and we get a 30% haircut total in housing prices in Squamish, that's not unreasonable. That realistically, 1.2 in June of 2022, which was actually the high, let's say, was probably a little bit earlier than that. But let's take 1.2. And let's say there's a 30% haircut from that. that takes us down to $840,000 for the housing price index, which is still above levels since January 2021. So 2.5 years ago, it's still, prices are still there. Look how much housing prices have run from 2021 till current. That's a massive, massive change in prices. So I think the government recognizes that those people that bought in this area, may be slightly underwater, but it's not going to prevent them from living their lives. Their mortgages aren't going to change yet. Things aren't going to be a problem. They still have 3 years to correct the housing market if it's required. But those people that have bought and have held onto their properties for more than 2 years are still well ahead of the curve, unless they've taken out massive lines of credits or home equity lines of credit. Unless they've done something like that, then they're still going to be above water on their purchase. Let alone the fact they've been paying down their mortgage to begin with. So I think that's a lot said in a little bit of time. But I think, looking at what's happening here, looking at what the Bank of Canada is doing, we are going to see a fall in prices. The question is whether or not in the spring they're going to turn around. Good likelihood they could turn around in the spring, but it really depends on the direction inflation goes and what the Bank of Canada and the Fed does moving forward. I hope that's been helpful to you guys. I'm more than happy. I know this is a lot of information for a lot of people. I know that I follow the economies very well. I do a lot of that research. So if anybody ever wants to ask me any questions, feel free to shoot me an email, give me a call, whatever, and I'm happy to answer any questions you have moving forward. Okay, thanks very much, everyone. Have a wonderful weekend and enjoy this. We got a week of sunshine ahead of us. It's going to be fantastic. So enjoy it the best you can. Take advantage of it while it's here, because fall will be upon us soon enough. Take care, guys, and enjoy the sunshine. Bye for now.